All right, ladies and gentlemen, I hope you had a wonderful day. The Nasdaq had its worst day in almost 2 months today, and the reason why will shock you is actually why I'm wearing this shirt. You see this shirt? Okay, I'm sorry for being so judgmental, but this is for Canada. Is this Canadian? All right, what about this one? Does this count? No? All right, but in all seriousness, it had to do with Canada, and it wasn't the fires. I'm sure you saw the headlines in New York and everything with that, but it was the Bank of Canada and their rate decision. We talked about it yesterday. We did not expect that there would be a big market reaction, but it did end up having an effect. It played out in the bond market, and it played out in the stock market, and now we have to keep our eyes peeled moving forward. So if you're not familiar with what happened, the Bank of Canada came in today, and they announced that they will be raising rates after they paused for 2 months. So I got something cool to show you. We'll explain it a little bit. There was a couple of other things. You had some weak China data in the morning. The markets weren't really too bad. I've been bringing this up every single time, just in the sense of, yes, we're making all of these movements, but when you kind of pull it out, we're still holding a very, very high range. Really, at 4,200 was still higher than the beginning of the year. So even if you fell 60, 70 points from here, you're still at the yearly high. So there's no things we're freaking out on, and the market has just been very calm in terms of news and being dry, but we're playing this back and forth now that we're up here, and it's leading into a big week, and now the market is finally responding. So we got a lot to talk about. I have the plays for you. I got the keys, all that good stuff. So I got to remind you, show some love if you'd like. Hopefully I've given you something, but check us out on stream, YouTube. It's right there. You see, it's free 99 live, everything, Monday through Friday. Okay, but let's get into the keys, my friends. Like I told you, the unthinkable happened today. The market actually responded to the macro data. Bank of Canada, they came out, they made that big decision. We were literally saying yesterday, the market is probably not going to care. I was saying, hey, we're up at a high level. I was assuming the market wasn't going to do their homework, and then they'd move on and kind of play this complacent game of going back and forth with 4,300. Maybe I should have showed you that in the beginning, but just to give you a little bit more context, even on the day, remember this 4,300 is huge, and you literally went up to 4299.19. That's the second or third time so far. You're coming within like 1 point or less than 1 point from breaking out, and we still haven't done it. But that's why I've been saying there is a lot of bullishness still kind of holding. Even if you dropped almost 100 points, you are still at the previous high. So you could argue a little bit about what we saw today, but like I'm saying, right when that Bank of Canada decision came out, the market really did change, or that is actually where we started this little sell-off. It was right around 10 a.m., 7 a.m. Pacific time. So that was a big deal, and it even moved the rate hike odds. Like we're saying, we're going to get into that, but there was also the other factor of just the overall unwind and rotational stuff that we had, and a very quiet news day, macroeconomic day. The trade balance came in line. Nothing else was really moving things. So now we could get into the good stuff, because that's the first key in this thing. I'm saying, yeah, we're going to start talking about this. What happened after the Bank of Canada today is that the market started to price out, not price in, price out rate cuts for 2023. And this is why it's so important, and hopefully you could bear with me on this. There's only 6 months left. So from the beginning of the year, even till a couple of weeks ago, the Fed futures in the bond market, they were pricing in 3 rate cuts by the end of the year, from SVB, when all of the bank's failures started to happen, the economic data, all of that stuff in the last couple of months. It led the bond market to price in rate cuts. Yes, we've been going back and forth. What are they going to do at the next meeting? 25, pause. Yeah, we're talking about like right here, right now. But the whole time you've heard it, the longer end of the bond market has been pricing in rate cuts. So now with only 6 months left, this makes a lot of sense why things can start to change. And after that data today, that is what we started to price. So this is what I want to show. I've brought this up in the past, but I really want you to go. I want to go over this slow and again, and I want you to see it. And the best part is I want you to monitor this, because we will watch this over the coming days. And I even have a play related to it where this is going to be something big probably for the rest of the year, or until we get real clarity on what's going on. But what you are looking at right here, this is the Fed futures. Today, there's 70% odds that there will be a rate pause at the June meeting. Earlier today, it was at like 50 or 60. It's been going back and forth. Remember, just a week ago, right before the debt ceiling, this thing was pricing in another rate hike. This has been going back and forth, but this is for June. So now let's go to July. Even though we're pricing in no rate hike for June, the bonds are now pricing in a rate hike for July. So this is where some of the paradox begins, because you're starting to see that the market kind of believes the Fed in the whole idea of skip. Because if you expect the Fed to actually not raise rates in June, what is the risk? Is that right when the Fed stops raising, everybody says, look at history. Right when you stop, you will be cutting soon. Everybody looks at the economic data. Boom, everybody front runs the bonds, and then we start pricing in rate cuts. You should have seen this happen several times already this year. So this is where some of the irony and interesting things happen, because they're pricing in the pause, but somehow the bond market or the bond futures, they also believe that you will hike next meeting. So that's just the first little paradox, but this is where now where today fits in, because look at December 2023. These are now pricing in a cut from the July level of 5.2 to 5.5. So now that is the one rate cut. So apply that to this scenario here where, okay, you're going to pause, you're going to raise rates. The market's not getting on the front run, but they also still believe by the end of the year the Fed will have to cut. So that means in the next 6 months now, since there's only 6 months left, if you still believe cut, you are borderline saying there is immediately going to be a problem right around the corner that will force the Fed to cut rates. Not just pause, but to actually change course and cut. Now, before today, this was pricing in way more than one cut. It was saying we would have been a little bit lower. Again, you could look here on the probabilities to see how they move. And even in January, there's another cut. So it's saying by end of the year, one cut, and then first month into 2024, another cut. But for the most part, this is what moved after watching Canada pause and go back to going high again. We started to watch something, and this is the final thing. What I just showed you why I'm making such a big deal is because you got to watch that little December one. That is our last rate cut priced in for 2023, and that is what we want to be looking for. So that's your last key here. Moving forward, there's not a lot of news. Things have been dried, but don't get lulled. I've said it many times. Respect both sides. It could break above 4,300 this week. Maybe it plays the game. Again, even if it sells off 100 points, there's still a little bit of cushion, but we're holding out really for next week to see after the data now. Are we going to be able to confirm what is really priced in or priced out? I don't think Powell is going to give too much, and I think he is going to respond. And those Fed futures I just showed you, I believe they will respond on CPI, and Powell will do whatever they say after the CPI. So I think we're going to wait for that. But then as we move forward, following all of that data, we want to see, as we move forward with a new summary of economic projections, new inflation numbers, new Powell, and then everything we've already gone through, is the market still going to hang on to the idea of rate cut or not? Very, very imminently or right around the corner. We will see what happens. So those are the main keys, but I got one more for you. Just a little underneath the surface check, because a couple of things happened. One, bond volatility is breaking down around SVB levels, and I would look at the bank stocks. We're going to talk about that. The VIX has also been a little bit lower or hitting, again, below like 2021 or back to some of the 2020 levels, which is big. The Naira, the Nigerian currency, had a surprise little mini devaluation today and started breaking out. Keep that in mind. There was also a huge collapse on the Turkish lira with some of their policy, and then a new low on the Chinese currency for 2023. So just keep these in mind. It doesn't mean anything yet, but these are the things running, and I'm sure we will see something from it, but just ride with it and play the game of time on the x-axis. And I hope you're ready, but let us get into the play. So right off the bat, I got a couple of plays. I'm sure you see the first one right here, /ZQ. I'm just showing you the Fed futures, and I think these will be great plays before and after the Fed. What I'm trying to say is that there will be a lot of extremes as people react preeminently, and then after the data, we've watched it a couple of times. This market isn't about moving slow. Anytime there's data or something said, the Fed futures are swinging to extremes and back, and then they ultimately kind of hover at this 60-40. We were just watching 70-30. So really, if it goes anywhere beyond like 70-30 and swings to an extreme, I would short the extreme till it comes back in between all the data sets and events. And maybe this is something we could actively trade a lot more as we move forward, but going to be watching out for that. This has been a very interesting thing because, like I'm telling you today, I did not expect the market to actually respond to Canada because there's been a lot of complacency in other areas. So it's interesting to see what the bonds do, but let's see if it sticks. But that's play number one. Play number two, we talked about it yesterday. Saw an interesting move. Wheat and MOS. I got murdered, or $700. It was actually only 20 cents on wheat, but the futures are big. But I got killed on the wheat play. But MOS, the fertilizer plays, they started to move. So really going to be watching this till Friday. You still got the WASDE report. We did not get anything. I said it here. Tensions are mute. So this is the first time I reacted in a long time. But even then, the U.S. was like, we don't know who to blame yet and all of this. But day one afterwards, you're not, again, the same reaction from some of these headlines hasn't really been there for the last year. So going to be watching it in the next week, use the volatility of the commodity report, and then we'll see. But if this doesn't start to hear about the consequences and they're actually like material, then it's back to the war gulag. That's a real reference. Okay, anyways, but that's play number two. Then finally, play number three, baby. KLF, KRE, and XLF. Big moves today on the regional banks. And this is what I was saying. Just pay attention with how that is moved. It's a big deal. There was a lot of bearish investment comments or comments from investors, like even Ray Dalio, Druckenmiller. Shout out to Huel and the fan. You know what I'm saying? But it was very interesting because now we are back up to a very big price point, even though it's low. It's still very low, but this was where SVB happened. And this was the thing we kept saying. We're like, okay, if it's sound and resilient and everything is fine, why are they still trading at such a low price? So very interesting in the context of things, especially with the bonds and rates. We'll see how it factors into Powell and all of that, but I think there could be an opportunity on the banks. However, XLF, it's not the same because they're not to their April high, whereas the regionals are getting back to their March low. So they are moving a little different. We've been seeing a lot of banks back and forth, but they have definitely made their selves be known as we've been getting some of the unwind from this little mini tech blow off top. But we'll see what happens. Besides those plays, I have nothing else. I don't think I cut out of the MO. So we talked about the dividend play. It ended up working. So at one point, you could have got I think it went down to 80. They closed at like 87 to 90. But I closed out of my shares. I only made like $70 on it. I was looking at it in the morning. I was like, okay, I'm barely up on it. But I was like, if this goes down, I don't have enough cushion. Even if I get the cushion, it only guarantees me like 20 cents. So I wanted to show you guys the example, but it's just like it was going up. And I was like, if this comes down, I'm not going to like this. I knew it didn't really make as much sense. And like I was saying yesterday, there wasn't really a catalyst compared to MPW. So I closed out of the MO shares, did not decide to do again. We were waiting to even buy the put, so snubbed it pretty early. That's the good part. And then MPW still riding. They did great. You see where the play's at now. We have 3,000 if we collect the dividend and hold till June 14th. But I said it today, if you got trade shares, even if you bought the puts, you could still sell out and walk away with a pretty penny because we got a really good price and a really good move. So keep that one in mind. But that is pretty much all of it. I'm going to be watching a lot of ZQ and the bonds and those things moving forward. We'll keep a couple of eyes on commodities and anything else if it develops. But other than that, we get ready for next week. We see what this week provides, and it just don't get lulled into anything. But it's going to be an exciting one. And there's only 6 more months and a lot of bold predictions, Chad. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember You can't chase. You got to attract it. You got to love it. You know what I'm saying? That's it. Just don't chase it. Same thing even with peace. I don't want you to focus on getting peace so much you lose your peace, okay? Do not be aware of it so much that it takes you away from the main mission. Relax a little bit. Understand the truth of the victories you have already received and the fact you are blessed. Especially if you're watching this on a computer with internet, with food and water and a lot of other things. But still, Chad, you get it. You are in the game and you've made it this far. I don't think you can this point. Oh. You saw that. I heard him. Oh, he got, okay. That's Horn. I got to leave. Okay, Horn, bye. I love you. That's hype.